Hey, VIX Trader here for Tuesday, December 4th, 2018. I thought I'd first put up a video about yesterday's trade just to show you how yesterday's trade panned out. I finished the day, really netting $326, which was about 0.9% gain, which is fine for me. If I can net $1,000 a week doing this week in a week out, I'm pretty happy with it. I'd rather do this than work a regular job and have a boss and have the freedoms that I do. So I think it worked out pretty well. Like I said, $326 for the day. That wasn't that bad. And we'll see how the rest of the week goes. One of the important things about Mondays is that you don't get too aggressive at the open and let things play out. We had discussed at the open, the market's going to open around here, the 100-day moving average, which is 280, 120. We'll see what happens. You don't want to be. I don't want to be shorting. I short the TVIX, or you can buy the spiders, whichever you do. But you don't want to be trading the open here, the spiders, and buy the spiders and have it go down on you. And it's above the trend. It's above the 3-day moving average. It's above the 5-day moving average. And you don't want to be like shorting the TVIX, which open up around 33 and 75 or 34, and have it rally on you to about 36 bucks. Finish your day at 35.50, and you essentially made your trade for the day, and you're down $2 or $3 depending on how many shares you got. It could be $800-900, and your week is already off to a negative. So one of the things, like I said, discipline equals freedom. You want to be disciplined, and we talked about the market is methodical, and we'll see how this panned out. Like I said, it's probably going to come down to this 3-day moving average, and we have clues. We talked about this SPX indicator, which I used at 6 p.m. The range was at 6 p.m. from 27.96 to 28.07, and we see it was right here with these lines, and we see right off the bat, this is right at 9:30, it broke the 296 area. So that gave me a clue the market is probably going to head a little bit lower. The question, how much lower? I'm expecting it to come somewhere close to this 3-day moving average, around 277 area as it gets higher. As the day goes on, this will get closer to 277, as you'll see. But that gave me a clue at the open. It's going to be a sell-off, not a gap and go, which would be you open up and it just runs, right? Instead, it's going to be a retracement. And we can also see that, like here, with this chart right here at the open, this is a 5-minute chart, opens up and just right off the bat, just sells off right at 10 o'clock, and goes throughout the day, and so that gave me a clue. There's going to be some retracement. The question is, at what point, at what price can I short the TVIX if I decide to short it? We discussed some options would have been to either stay out of the market, or try to short either at the bottom of this line or short at this green bar, the green line, the 5-bar moving average. And those are some things we can look at. One thing I want to introduce you to is the Fibonacci retracement tool, and this thing helps me tell me what areas the market could potentially bottom out. Simply to use this tool, when I X out this shift right off the bat, I use freestockcharts.com. You just click on this tool, measure from the top right here, and from at the time what happened to be the bottom. If it was here, you can do it here. But as the day went on, I used it all the way down here, and you can see that's how I use it too, from top to bottom. It's a retracement, tool, and we'll see throughout the day. These lines, these numbers have numbers. A very bullish scenario would be if it held this 23% area, upper quarter. That's very, very bullish, and you expect it to come down here and go run. Gap up and run. It's called gap and go. Well, if it holds up a third to 38% area, it's still very bullish. But the warning signs when it goes below is 50. If it gives up more than half of the morning gap gains, it's very bearish. So throughout the day, basically what I did was, we talked about in the previous video that it's going to gap up around here, and it's probably not going to touch the 3-day or the 5-day, which is this 3 days. This one, the red is the 5-day, but so I'll be using this 5-bar moving average. That once it bottoms out around here, we'll see which direction it comes up here. It touched it. My first opening trade was actually shorting the TVIX right around here at 36. and covering at 35, which is what I did about 3 times throughout the day, for the total of $300. And so your first area, if I want to short TVIX or buy the spiders, would be around this area where they touch the screen bar. And even if you have bought around here, you should end of the day above it. So you still would have made money, 25 cents, but you wouldn't have lost for the day. Well, that's how you handle these big gap ups of 1.5% or 2%. You're looking for a trend, and this was ended up being a trend. But at the open, it sold off. It came down, and it came, and this, if it stayed above this channel would have been essentially voided out, meaning a new channel would have been forming. But it came and touched the top bar of this channel, this top range, But the first clue was, like I said, was it broke the futures at 9:30 to 27.96. Then it violated the first 15-minute primary bar. That tells me that there is to be cautious, that this market could reverse. It could even go red. You never know. But we're looking to see how it reacts throughout the day. That's why we be patient. The Fibonacci retracement levels, it broke to 50. That was the second clue. This could be trouble. To be cautious and not to be. You could end up in a situation where I could end up shorting the TVIX at like 35, and this thing totally breaks down and goes red for the day, and the TVIX closes the day at 45. So I'm down $10, and that has happened. That can happen. That's why I say trade small. In this particular environment, when you have a tweet president who tweets a lot, he tweeted 9 times in 3 hours from 9 a.m. to noon. Those things have market implications and can cause all kinds of volatility. So you want to trade small because of that. So you don't have big losses. And you're going to hear news about seasonality, Santa Claus rally, and the month of December has been up 83%. I'll ignore it. When you have a tweet president, it's a different ball game. And those things don't matter. Seasonalities the past 2 years haven't worked. One thing traders will tell you, the seasonalities just haven't worked with this president. Because there's just too much news. And so trade what you see. And what I was seeing is a spider selling off. And where was the bottom going to be? And if you had traded throughout the day, you could, every time the TVIX, every time the spiders hits the bottom of this green candle as it was moving upward, you could have shorted the TVIX. As you could have seen the opposite here every time around this area, the 36, and you could have covered a 35. I basically, for 3 trades for the day, at the open, shorted at 36, covered at 35. Shorted at 36, covered at 35. Shorted at 36, covered at 35. That's pretty much what I did, And I paid attention to see, as long as this was going sideways and didn't violate this bottom candle, which was the low of the day instead of new low, it would have been okay. Like I said, it was a $326 gain for the day, which is okay. Nothing special, So that's how the day panned out. And like I said, FOMO, fear of missing out. Your cure for FOMO is the 3-day and the 5-day moving average. The market is not going to open up 1.5% and go up 5% in minutes. It's just not. The computers won't let it. The market will most likely sell off. It could go sideways, or it could go down, but it's not going to go zoom, from 275. Well, the spiders isn't going to go 275 to $300 in 5 minutes. The S&P futures, the S&P index isn't going to go up from 2,800 to 3,000 in 2 minutes. So you don't have to worry about that. And that's how the day went. You have trading rules. I close my position out every day. Like I said, now the market is down pre-market at $2. That's why you close them out every day. To me, this is still downtrend rules, essentially, within a bear market. Okay, this is VIX Trader, covering yesterday's trade for Monday, December 3rd. Have a great day. I hope these things are helpful. Please like my videos if you can and subscribe. Thank you very much.